What's your view on the broader markets? Are you concerned that we might be seeing an AI, a tech bubble that could burst and impact the S&P 500? About a quarter of the main index is big tech.
Yeah, no, I mean, this has been talked about ad nauseum, right, over the last several weeks or months even. And I know you mentioned bearish sentiment from the pros. Well, they've been bearish all year and they've missed the run up. And what we saw last week was the greatest inflow into tech equities last week all year long. And this is concerning because it comes at a point where tech valuations look pretty stretched on both a PE basis and a PEG basis, so price to earnings growth. So I think that we're in this place where it's precarious about where we go forward from here. But what I do think was a positive was on Friday, we did see an expansion into other parts of the market to start to perform better. So industrials and materials actually turned positive on a year-to-date basis on Friday after that move in the market overall.
All right, so Lindsay, I want to ask you, you were just kind of questioning smart money as hedge funds and these other big investors are often called, and you're saying they missed part of this rally, but the point that we're looking at back here is 2007, right before the Great Recession. They had this view, and now we're facing another potential recession. So is there some wisdom in looking at the moves they're making?
Sure. You know what? There's always wisdom to look at the past, right? But history is never any guarantee, okay? So I think that's one thing to remember. And then another thing, on the flip side of that, Frank, what I would say is Ryan Dietrich, a good friend of mine, he did some work over the weekend, and we're almost 20% off the bottom of the bear market here. And his historical data shows that once the market rebounds 20% off the low, it has always continued to end positively that same year. So there's a flip side to everything, I think, Frank, and everyone picks their own position.
Fair point, fair point. All right, so the Fed and its decision coming up in its June meeting, the big next inflection point for the market. I'm looking at the CME Fed Watch tool right now, 83% chance of a pause. Where do you stand when it comes to a pause?
Yeah, I mean, I think that's flip-flop significantly over the past couple weeks, which is absolutely normal. You always see that, especially when you're either entering a rate tightening cycle or coming to the end of it. So that's completely normal. Where do I stand? I think that the Fed does have room to potentially move higher. I don't necessarily think that they're going to do it at the June meeting, but when I look at the jobs data that we got last week, wage inflation that we saw, and just inflation in general, whether you're looking at core CPI, core PCE, or even core services inflation, which the Fed has been looking at more and more for direction of where inflation can go from here, they all still remain very elevated. Now, they came down from high levels, but they're still far away from that 2% target, and they've remained kind of sticky. So I do think that the Fed may have more work to do here, unfortunately.